Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlett Fu.
Let's just check in on industry groups and more broadly what we've seen across the board because, well, just consumer staples in the red. Everything else is in the green from once we have breadth. But look, IT, technology, still on for a good run, 1.3%. The Nasdaq is still down on the week, but we're up on the day. Energy up 2%. Industrials, it really feels as though that's the air that gets powered by the hint of rate cuts.
Look at all that green on the screen. Scarlett Fu would call that a spinach pizza pie. I feel bad for whoever had to do decliners today. That would be Norah, Mulinda. Norah, thanks for doing
You left me with the
hard work. I did. I'm sorry about that. Hey, look at the KBW Bank Index, up 3.2%. Interest rate sensitive stocks surging today. This is the highest close, first record, going all the way back to 2022. First record for the KBW Bank Index, up 3.2% going back to 2022. All because of what we heard from Jay Powell. Traders happy that he signaled a willingness to cut rates next month, pointing to rising risks for the labor market, even as worries over inflation remain. Also, Caroline, you mentioned Intel. This was certainly on my radar today for a gainer. Intel shares absolutely surging on the day. This after we learned that the president said that Intel had agreed to give the U.S. government a 10% equity stake in the company. The president casting the agreement as one that would revitalize Intel, saying the company would, quote, has been left behind compared to competitors in the chip-making industry. Intel shares were up as much as 6% earlier in the session, and today up by 5.6%. Also on the day today, Apple shares hitting session highs. This after Bloomberg's Mark Gurman reported exclusively that Apple's in early discussions about using Google Gemini to power a revamped version of Siri's voice assistant. It's a key potential step toward outsourcing more of its AI technology. Talk about strange bedfellows. I mean,
it's a world of frenemies, Tim. It's a world of frenemies.
Can you believe that? I emailed Mark Gurman. It reminds me of that moment, Caroline, like 10 years ago, when there was a demo. I think it was an iPad or an iPhone demo, and they invited Microsoft to come on the stage to, and everyone was like, "What are you? This is Apple and Microsoft. These are two companies."
But remember,
that have been arch
who
rivals
pays
for so
billions
many years.
to Apple all the time to be able to be the number one search destination on their phones? That's the one that's been quibbled with by the government thus far.
There it is. Frenemies, I think, is the best way to describe that. All right, Norah, you have the hard job. Take it away.
Here we go. So let's take a look at some of the decliners that we saw today. I'm going to start out with the biggest decliner in the S&P 500 today, and that was Intuit. This has really been a stock that has been in focus after the tax software company delivered a tepid forecast, and this completely overshadowed an otherwise strong fourth quarter report. But we do have some commentary out from Morgan Stanley, the analysts over there, saying that given solid progress on core growth initiatives and a history of conservative guides, they would be a buyer on weakness here. But of course, we did see that the stock still ended lower today, down about 5.1% for this $185 billion company. Shares are up about 5.4% year to date. Let's move over to Workday shares. This is a company that's also been in focus. Investors were left disappointed that the HR software company left its subscription revenue guidance unchanged, completely flat here. Apart from a small boost that they did have from the Paradox acquisition, analysts on Wall Street are really flagging concerns around AI displacement continuing to linger here. Barclays is saying that the quarter was solid and the slight beats on a couple things like subscription revenue alongside with meaningful outperformance on profitability and cash flow would usually warrant a positive response here. But of course, we know this is one of the decliners. So here in the red on this Friday afternoon, shares of Workday are down about 14% so far this year. And lastly, let's take a look at SX, of keeping an eye on a lot of those rail stocks here. I'm looking at S15 rail. That index is down just a touch, down 0.3% today. But this is after we did hear that CSX and BNSF announced a new intermodal service products to ship between the Western and Eastern U.S. A lot of people were really looking for some sort of M&A here in the space for the railroad industry, but we're just seeing a partnership here. So you are seeing that reflected in terms of Wall Street sentiment here for this stock.
Some lonely sliders there today. Well, you know what else was down, guys? Yields were down. Look at that. It looks green, but actually that is the buying of treasuries, the dropping of yields. And that 10-year dropped like a stone after the Fed chair's speech was released. Down more than 10 basis points to finish the day at 369. Across the curve, you could see there was lower, but obviously towards the back end, not the huge moves that we saw at the front end. In fact, the 30-year yield there finishing the session at 487.76. And that 10-year glued to the 425 mark, 425.37. But I do want to point out one thing. Anna Wong from Bloomberg Economics is out with a note suggesting that perhaps markets are being a little bit too sanguine here, that the speech was actually peppered with hawkishness, in her words. She's saying he talked a lot about labour market cooling. He didn't signal the need for urgent action. So maybe watch the space. Maybe we've all sort of written off September as a month where the rate cycle starts, the rate cutting cycle, and maybe in the end it doesn't happen, which would make for a big reversal, I imagine. Yeah,
actually, Norah brought this up on our program earlier. Is it going to be, if there is a cut in September, is it going to be a hawkish cut or a dovish cut? And I guess we'll have to wait and see. And there's plenty for us to sort of digest between now and then on a lot of data that comes between now and then that could change the narrative and change the picture.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.